When the stock market closed this evening, a share of GameStop was valued at more than $325. That's an increase of 70% just today, according to the Associated Press.
I think we definitely will see this very often. It will not become a very rare event. It will become a common event.
What Dr. Wu is talking about is the rapid rise of stocks like GameStop, which were said to be shorted by hedge funds, which means they were betting on the stock to fail.
The process of short selling is borrow the stock and hopefully the stock goes down and buy back, return the stock. So the short sellers make profit when the stock prices goes down.
Here's a visual example. Someone could borrow one share of a stock for $10 from a broker or any place that sells stocks. If the price drops to $7, you can cover the short position and buy one share at $7. When you return the borrowed share, your profit is a $3 difference minus interest. However, say the price of the stock goes up to $15. You then have to pay more to buy it back. And that's what happened with GameStop. Thousands of people on a Reddit subgroup called Wall Street Bets began buying a lot of GameStop stock, forcing hedge funds to lose billions.
People generally thought those shorted stock is like a garbage. And right now, its stock prices goes up and it creates a lot of, volatility.
To try to combat the volatility of the market, investment platform Robinhood temporarily blocked individuals from buying any of these stocks. Today, Robinhood eased back on some of those restrictions after facing backlash from the community and political leaders alike. Dr. Wu says it's still unclear if that's legal, but says
Robinhood kind of like protect themselves because if a lot of investors suffer huge losses because of this, it will discourage investors trying to participate.
As for how this affects the average Arkansan,
I would expect to say 401k rise up and down. It's not very stable, at least in the short run.
So Dr. Wu says she does not encourage the average Arkansan to buy this stock or one of the other stocks that is seeing this surge right now. She wants to remind everybody that when you participate in the stock market, you are using real money. You are not using monopoly money. You are using your real hard-earned dollars. So she says if you don't have funds that you're willing to lose, it's not worth the risk. Reporting live in Fayetteville, I'm Jamie Weiss, 4029 News.